Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that's facing a bit of a challenge. Let's just say they're trying to avoid getting kicked off the stock market, literally. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss these filings and more. We're looking at an 8K filing from Big 5 Sporting Goods Corporation. The big news? They've received a warning from Nasdaq because their stock price has fallen below the minimum required level. This could lead to them being delisted, which is bad news for any publicly traded company. They need to get their stock price back up and fast. The heart of this report is that Big 5 Sporting Goods got a notice from Nasdaq, the stock exchange, saying they don't meet the requirement for their stock to trade at a minimum of $1 per share. Think of it like a store getting a warning for not keeping its shelves stocked. They have to fix it or risk getting shut down, or in this case delisted. To stay listed on the Nasdaq global market, Big 5 stock has to trade at or above $1. If it doesn't, they get a grace period. They now have until November 10, 2025 to get their stock price back up above $1 for at least 10 straight business days. It is like having half a year to get your act together. If Big 5 can't get their stock price up by November, they have another option. But it's not ideal. They can apply to move to the Nasdaq capital market. This is like moving to a smaller league. It requires them to meet certain conditions, such as showing enough market value of publicly held shares and paying an application fee. They still need to fix the low stock price problem eventually, but this buys them more time. If the company fails to meet the requirements to stay on either the global market or the capital market, Nasdaq will send a final notice saying they're going to be delisted. Then Big 5 can appeal, like going to court, but there's no guarantee they'll win. Delisting would make it harder for people to buy and sell the stock, potentially driving the price down even further, making it difficult for them to raise money. Big 5 says they are watching their stock price closely and will consider their options to get back in compliance. This could include strategies like trying to improve their financial performance, to attract investors, or even doing a reverse stock split which would artificially raise the stock price. However, they admit that there's no guarantee they'll succeed. Now let's shift gears a bit and think about what all this means for Big 5. First, the obvious, this is a wake-up call. A stock price consistently below $1 isn't just about meeting Nasdaq's rules, it reflects deeper issues. Maybe investors are worried about the company's performance, or perhaps there are concerns about their future prospects. One possible strategy they might use is a reverse stock split. Imagine you have 100 shares worth 50 cents each. A reverse split could turn that into 10 shares worth $5 each. It doesn't change the overall value, but it does bump up the share price. However, it is often viewed negatively by investors who see it as an admission that the company is struggling. Another thing they can do is focus on improving sales and profits. If they can show investors that the company is growing and making money, the stock price will likely follow. This might involve cutting costs, launching new products, or expanding into new markets. The biggest risk Big 5 faces is that this becomes a downward spiral. A low stock price makes it harder to attract investors, which makes it harder to raise money, which makes it harder to grow the business. They need to act decisively to break this cycle. For Big 5, this is a high-stakes game. They need to convince investors that they have a plan to turn things around. If they can do that, they have a shot at regaining compliance and staying on Nasdaq. If not, they could face a long and difficult road ahead. Alright, that's our breakdown of Big 5's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.